Johnson & Johnson, is this a stock you should buy right now? That's what we're going to try to answer here in this analysis video. I like to simplify things, and I'm going to discuss 6 metrics in this analysis: earnings growth, PE ratio, dividends, return on equity, free cash flow, and intrinsic value. They're then put on a 0 to 99 grade scale so it's easier to visualize the different numbers I'm going to throw at you in this video. The first 5 metrics mostly deal with how good of a business we have. No point investing if it's an undervalued piece of crap. That's why I save intrinsic value near the end. Earnings growth is by far the most important metric. A company that doesn't grow doesn't survive for long. JNJ has average growth at 4.7% per year going forward. For a prominent, stable company, this is reasonable, but not great. For PE ratio, most people look at it as a valuation metric. I don't base my intrinsic value on the PE ratio. The PE ratio to me is a measurement of hype. Too high and there's just too many eager eyes on the stock. Too low and we might have a hidden gem. JNJ has quite a high PE ratio at 35.08. As I said, it's an established company, but hype is hype nonetheless, and that's not good. Dividends should be an obvious metric and something a lot of people ignore. I'm going to put it out there. If you buy a stock that doesn't pay you anything, you're speculating, you're not investing. JNJ pays an amazing dividend at 2.75%. For a big brand like them paying so well, that's a point in my book. For return on equity, it tells me a lot about the management. It shows me how efficiently my investment dollars will be treated if I were to buy the stock. JNJ has great management with an ROE of 17.6%. A blue chip company that still keeps things efficient is a good business trait. Free cash flow is my way to quickly evaluate how dominant of a company we're dealing with. The more cash available, the better opportunities to buy up other companies, the better to research, and more money for marketing. J&J has a nice cash flow to the tune of $17.18 billion. That is a prominent war chest that can make acquisitions and build upon its already established brand. Okay, as I said, these 5 metrics we just went over tell me what kind of business we're dealing with. With a business grade of 66, we're dealing with a very nice business. Aside from the not so good hype around the stock via its PE ratio, the rest of it looks nice. No wonder so many people are invested. But before we get our intrinsic value, consider joining my Patreon and get access to every grade from every company I've analyzed. It's updated all the time. Go to patreon.com/GrowthShares or click on the link in the description. As I said, we know what kind of business we have, but let's see what the price tells us in terms of attractiveness. Nonetheless, Johnson & Johnson is worth $129 per share. Right now, we're looking at a very overvalued company. With too much hype, it's just not the right time to buy this stock. And now that we've got all the numbers down, we put it all together and get our final grade. Johnson & Johnson has a final grade of 59, and that makes it an average long-term investment. For me, this business is terrific, but what's holding it back is its price. I'd wait on this to drop before investing. But hey, after this video comes out, anything can happen in the next few days, weeks, months, even years. But long-term is always longer than you expect. Keep this in mind. It took Warren Buffett 45 years to become a billionaire. Invest wisely, and as always, take care of your money.